Hello and welcome to Crux Investor. We spoke earlier today to Craig Parry, CEO of IsoEnergy. Quite an interesting conversation. If you want to get my view and opinion from this meeting, you can get that at the Crux Investor Club. You can find that at cruxinvestor.com/club. In there, we also have company reports and research. We have training courses and modules. We have a thriving investor community who share thoughts and ideas in a very positive way. We've got articles from experts from all around the world on a variety of topics and commodities. And you can find out a little bit more by clicking the link below in the description. Of course, we'd love to hear back from you. So do remember to click the like button and leave a comment for us. You can also look in the description below at some of the topics we discussed. Anything interesting in particular, click on the number beside that topic. That's called a timestamp, and that'll jump you through that part of the interview. And of course, please remember to click the subscription button if you haven't already done so. And of course, for more videos like this, click the notification bell. Craig, how are you doing, sir?
Good, Matt. How are you?
Yeah, not bad, not bad. I haven't spoken to you since April. You've been a busy boy. Have you had any time for a bit of R&R?
We took a few weeks off. We did, although, a lot of work during our trip around British Columbia, but had a great trip. British Columbia, wonderful place to live, and we've been lightly touched by COVID so far, so we're very, very fortunate here.
Seems to be. Well, I'm glad you managed to get a bit of rest and relaxation in, because it looks like you're going to be a busy boy the rest of this year, and you're about to tell us all about it. So for people new to the story, who haven't heard your story before, give us that 1 minute overview of the business, and I'll pick it up from there.
Sure. So, of course, we're a TSX venture listed uranium explorer, spun out of NexGen Energy back 4.5 years ago. We've been exploring that eastern half of the Athabasca Basin and building up a land position, which we've successfully done now. And of course, 2 years ago, back in 2018, we discovered the Hurricane deposit, which is the latest and fastest growing high-grade uranium deposit in the Athabasca Basin and indeed in the world. Very well supported by NexGen Energy. NexGen, of course, owns 53% of the company, contributing at every point along the financing path there. We just closed a financing that was backed by Queen's Road Capital and Warren Gilman, who, of course, ran Lee Cushing's CEF fund, which invested heavily into NexGen. And Warren's now become a supportive shareholder. So, we're very well positioned, I suppose, as we head into what we think will be a bullish phase of the uranium market, with capital and a great exploration project and discovery on our hands.
Yeah, I mean, absolutely. The macro situation, I think we discussed last time we spoke in April, was just sort of beginning off the back of COVID. I exchanged a few thoughts with you then. You said to me that you had enough cash, $3.5 million to last you to the summer next year, to 2021. You've just gone and taken $10 million. Why?
Well, when someone like Warren comes along and offers you $10 million, you've really got to sit up and take notice of that. Of course, he's a strategic long-term investor. He's backed by his network of investors, but crucially 3 Aussie billionaires, Andrew Forrest, Gina Reinhart and Jack Cowan. And those guys, of course, have great firepower to support the development of a project and further investment along the path. So you've got to sit up and take notice, of course. We were well funded through towards the end of the year, and you can always take that risk to get in and start drilling and hope that you can raise capital. But to ensure the future of the company is strong and stable, you've really got to look at it when those opportunities arise. And I suppose we've seen some of our competitors struggle to find capital even during this sort of bullish phase of the market we've been going through. So that set us up so very, very well to do the work programs we've got ahead of us, really, for the next year and a half.
Yeah, I think it's quite interesting, because you're right. A lot of uranium companies are not able to raise money in this environment. And those that do have raised enough money to keep the lights on. So $10 million is a big chunk of change. There's a handful of you that have been able to raise a decent amount of money. What was it that you said to Queen's Road that said, this is the one to back? We are the ones to back.
Yeah, good question. It was more what Queen's Road said to us. Warren was looking at the story very carefully. Warren's, of course, heavily involved in NexGen. He's on the board there. I think earlier in the year we put out some great drill results. In fact, one of those holes that we put out from our winter program is in the top 3 or 4 drill holes in any commodity drilled anywhere in the world in the last 24 months. So Warren was watching the story very closely and approached me to see if we would be interested in an investment from him. So, we and I've actually been, I've known Warren for a long time. Whenever I'd go through Hong Kong, going back 12 years ago, I'd call in on him and have lunch and try and convince him to invest in some of the other things I was doing at that time. So I've actually been working on Warren for over 10 years for an investment. So I was ecstatic to get him across the line finally, but really he did all the heavy lifting. It was him that was driving the concept, and, he loves what we're doing. He loves uranium. They take a very long-term view. He's based in Hong Kong. He's worked with Li Ka-shing for many years. They see exactly what's happening in China. I think we saw, as late as yesterday, the announcement of more reactor builds coming in China very soon. So, they see that broader thematic. And how do you get set in that space if you like that thematic? Well, a great exploration project and a new high-grade discovery is a great way to get positioned.
Yeah, well, you talk about the macro there. Yeah, two new reactors approved for construction yesterday. Great. 2 reactors announced their plan to be taken offline in Illinois. Swings and roundabouts. But the macro story is coming. He likes that. He's got in early to NexGen. I want to get into what he sees in you guys. Are you guys just going to repeat the NexGen plan? Is that what you're doing? Is he making the same bet twice?
Look, that's probably sort of not a bad way to look at it, I suppose. If we always take the view, we've talked about this before. When we look around the world for other opportunities, of course, when we set up IsoEnergy, part of what we wanted to do was look to acquire existing resources, projects we could build, as we cast the net out globally, we always came back to the Athabasca base, and we were very fortunate to make that hurricane discovery because it is, it's in Saskatchewan, number 1 mining jurisdiction in the world. You can get projects permitted. It's home of high-grade uranium, great deposits, of course, those tier 1 assets of Cameco, and now Arrow, NexGen's Arrow, of course, which we found back in 2012-13. That's a true tier 1 mining asset. You don't see too many of those anymore. So I think he's seen that sort of potential where we are. A little bit uniquely positioned out in the eastern Athabasca as well, very close to that existing McLean Lake mill and all of that wonderful mining infrastructure. So, we're a bit of a unique story in that sense.
Okay, well, tell me this. You just said something. You just said easy to get permitted, right? I'm not seeing that out of Canada at the moment for uranium stories. I'm not seeing that at all. So this is why I ask you about someone like Queenstown Road coming in and making the same bet twice. That's not really mitigating your risk profile, and neither is NexGen in a way. The 53% shareholder in your company, right? And I know your history with NexGen. Wouldn't it be more sensible to have a slightly different approach from NexGen? Because there's some long permitting times talked about. There's some, $1 billion plus type capital needs to be raised at some point. If you're going to repeat that, aren't you in danger of making the same sorts of decisions, which may, receive the same? I'm trying to be careful with my words here. Get the same reaction from the marketplace.
Well, look, let's test some of those assumptions. Permitting. No one's in recent years, the past 10 years, tried to permit a uranium mine in Canada. NexGen's the only company that's doing that assiduously at the moment. They're very, very serious about that. I'm still an advisor to NexGen. I stepped off the board, of course, to focus on ISO and make way for Brad Wall to come on the board. But I still see a little bit of what's going on there. And I think people will be very much surprised at how quickly that project gets permitted. Of course, crucially, that Arrow project is vital for the economy of Saskatchewan, but also Canada. Saskatchewan, the prairies, Alberta, Saskatchewan have been very adversely affected by lower potash prices, lower oil and gas prices. So, unemployment's a real problem there. And so Arrow NexGen have got a chance of really helping with that. I think the project will actually generate $3 billion of taxes and royalties for the country as well. So, it's a great project for Canada. And so I don't think I think people will be pleasantly surprised by how long it takes to permit a project like that. And I think when it...
Tell me about that, because that's really important. You can use the word vital and you can throw economics at it and say, the province needs the income. But and I know that permitting isn't just based on the economics, right? So there's a lot of steps to kind of go through to prove technically that there's going to be no lasting damage. And if there is, the ability to remediate is really, really important here. So there's a lot of factors involved, and a lot of people involved, a lot of stakeholders involved that make that decision. So what are you saying with regards to being pleasantly surprised about how long it takes to permit their project?
Well, I think, there's been a lot of talk by people out there suggesting that a timeline for permitting of a uranium project in Saskatchewan today is probably 10 years. We think that's not right. That's sort of based on incorrect assumptions. We think it's much more, there's probably a little bit more work to do because of the nuclear energy component of things, but not too much more than what it would take to permit a gold mine in this day and age. Watch this space, I think, on that one.
Okay, so let's check the other assumption there, which was around the $1 billion plus, and I think in NexGen's case, somewhere around 1.3 billion, around there. It's a big number, but it's a high-grade project, so the payback should be relatively quick, but someone still needs to be brave enough to step into the breach, or a consortium needs to be brave enough to step into the breach. So where are those conversations? And the only reason I'm asking is because you just said, I'm going to replicate. It's not a bad thing to replicate the NexGen model, right? So that's where I'm going with this. So, again, is there any news there?
Well, in terms of replicating the NexGen model, what we're doing there is just following the path that Lee and the team have given us, really. Same processes, same approach to business, to stakeholder engagement. I've got to say that, the NexGen guys, their stakeholder community engagement model is like nothing else I've ever seen. It's I spent 8 years with Rio Tinto, and I can tell you I've never seen Rio Tinto do anything such an all-encompassing approach to developing a project and engaging with community. So Lee and the team have done an extraordinary job on that front. So we want to follow those sorts of processes and approaches because I think they are, world's best practice. And that's what will allow us to get through development of these projects relatively more quickly than people think. And then in terms of financing, look, I shouldn't speak too much to the Arrow project, but my personal view is that, $1.2 billion, it will be the world's largest uranium mine. It's a tier 1 mine. So $1 billion is a fairly trivial amount of money for a project like that. Its free cash flow in the first year will be over $1 billion. So you pay back capex in less than a year. And then if you look at the product, if you put a $50 uranium price, which I think Lee and the team will get at the very least for that project, you can forward sell 1 year of production to finance your capital costs. So, there's a bunch of things emerging there, but of course, we're now both backed by Queen's Road Capital and those fantastic big billionaires in Australia that want to see these projects develop. So financing is not going to be an issue.
Okay. Well, and you also mentioned last time there's some US and Canadian funds sniffing around at the moment. Do you think those groups are being held back? Those generalists are being, because the uranium funds themselves are quite small generally, right? They are. The generalists are going to need to wrap their head around the macro story here. They're starting to understand the supply-demand dynamics, or is it still just a little bit more work to do on them?
Yeah, look, I think that little rally in price and equities that we saw sort of March through to June just sort of dangled the line out there for them a little bit, and you started to see some real interest coming in. Of course, our share price since March has gone from, I think, 26 cents up to about $1.20 today. So we've had a spectacular rally, and some of that has been buying from, particularly resource funds, but also a couple of generalist funds have started to come in. So we're starting to see it happen. Of course, we've had this gold, precious metals rally that's got in the way of everything, and that's distracted everyone. Talking to a banker friend in New York yesterday, he was saying that there's a sense of FOMO amongst the generalists in wanting to get into the gold space, and so that's taken us, taken the limelight off the uranium space for a little while. I think what happens next, though, and you talk to Brandon Munro, of course, regularly, and Brandon's so much more eloquent and smarter than me on that macro picture. But, I listen closely to what he says and what some of the other, very good analysts in the space talk about. And I think, we're heading into that end of year period where contracting, everyone, the utilities and their purchasing managers come out of hibernation from August. This week we would be in London this week normally for the WNA, and that's when all that contracting discussion kicks off. And invariably heat comes into the uranium price then, and equities typically take off in October off the back of that. So we're heading into that period, and I think that will draw a lot more eyeballs to the space. I think if we see uranium start to move up solidly again, we're going to see a lot of those guys coming back in. Look, I'm sort of pleasantly I'm very pleased to be able to report that we of course we raised 12.5 million in that financing. 9 million of that came from Queens Road Capital, 3 million from NexGen, and we put in $1 million on a president's list ourselves. That type of financing left very little room for some of the resource funds and generalist funds to come in. The president's list, for example, by the time it was done, we had $6 million worth of orders in the president's list, and a lot of that from generalist funds out of Australia and the US and UK. So there's money out there. There's interest sitting there. I was very enthused by that. Unfortunately, we only ring-fenced $1 million for that component of the financing, because we could have taken a lot more. But anyway, that gives us enough to do what we need to do right now.
Okay, I think you're right on a few points there. I think people are waiting for the Russian suspension agreement announcement. I think they're waiting for the US elections to get by. But I thought the interesting thing is just I was listening back to our interview from April, which was a great conversation by you, by the way. But we talked about John Borshoff calling the spot market. I mean, he did it again. He keeps doing it. I actually think he knows what he's talking about, because he talked about the price getting up to near 35 and then dropping back again, and that's exactly what happened. But look, you talk quite often about sticking to your knitting. So let's talk about some of the knitting that you've been doing. Why don't you remind of some of the grades with some of these intersects that you've had, because they are quite remarkable.
Yeah, absolutely. So, of course, we kicked off our drilling program 12 days ago. We put out our first news release this morning from the results we're getting there, scintillometer counts, of course. But I think up until recently, the winter campaign, we drilled one hole there that hit, one of the holes was, of course, 33% U3O8 over 8 metres, which until recently was the very best hole drilled in any commodity globally in the last 52 weeks. I think someone's knocked us off the top of the table there, but we'll be trying to get back up there directly. And of course, today we reported one of our holes, 57. We drilled 10 metres at greater than 500 counts per second. That included 2.5 metres at 40,000 counts per second. Previous explorers typically report greater than 10,000 counts per second as being off scale. So there's a lot of off scale in that intercept. We drilled another hole then that intercepted 4 metres at 30,000 counts per second. So you can expect that those holes will deliver some high grade. And of course, the holes around them, there were a couple of very big holes, 8.5 metres at 20% uranium. So truly spectacular high grade results. One of the things we did do during our summer vacation is we took a geologist, very famous geologist in the uranium space called Dave Thomas, who was Cameco's chief geologist for many years. He's a 35-year veteran in the uranium space on a lot of that time in the Athabasca Basin. He tells us that one of those holes, our highest grade hole 34, It's the only hole he's ever seen outside of Cigar Lake that looks like that. So, we're very enthused by that sort of commentary. And I know that Dave Talbot put out a note on us last week comparing this deposit to Cigar Lake and potentially MacArthur River as well. So, it's turning out to be a truly great high-grade deposit. A lot more drilling to do. That's what we're doing now, of course. We've got 2 rigs turning. And, the results we put out today not only have expanded the high-grade footprint, we've also done a little bit of geotech drilling in there to test the centre of the system and get some, samples for geotech and metallurgical testing that's happening. And we're also expanding that lower grade halo out to the east. We drilled 7.5 metres at greater than 500 counts per second out in the eastern part of the ore body. So I can see the sort of, and when we say lower grade halo in these types of deposits, we mean 1 or 2%. Which is, considerably higher than the average mine grade around the world. So we can see that part of the ore body expanding dramatically as well. So, we're thrilled with these early results. Lots more work to do. We'll be drilling out there for the next 2 months, I think. And then that'll set us up neatly to work out where we go next, whether we, report a maiden resource late this year. I suspect what will probably happen is that we need to do a considerable amount of resource delineation drilling. We also want to test a number of our targets out to the east, which look very, very good, similar to what we've got at Hurricane. And then, that campaign will have an expanded campaign over the winter before announcing a maiden resource sometime next year. So that's, that's the knitting we're sticking to.
Okay, and it's going well. So what I want to try and understand here is you're an exploration company, obviously. You're not going to hit this cycle. You've just raised 2.5 million Canadian, was it 10 million US? You had a little bit of money. I guess you're sitting on what, 14 million Canadian, 14.5 million Canadian? What's that?
Bit over 14.
Yeah, so that sort of number. I'm interested in what you're going to do and how you measure that, because you've got 2 drills going. It's not, you haven't gone crazy, because there's no need to, because the uranium market, let's remind people, the uranium market is just not there. The spot price hasn't moved. Contracts are not being signed. People are waiting till the end of the year to see what happens there. How do you pace yourselves? Because your share price is, amazing. $1.24 today as I speak to you. Okay, that's fantastic. Since we last spoke to you, amazing. People are reacting really well to the exploration component, but at some point, the shine comes off. You've got to move this thing forward into a development story. People kind of lose a little bit of interest and move on to the next shiny object. So, what's your plan to kind of keep this interesting without diluting the existing shareholders?
Yeah, look, absolutely. Of course, having an increasing share price, I think we're the best performing uranium stock in the past 12 months.
By far.
And that comes from, it sort of gets back to, I think, when my very first interview with me, you said to me, I don't get the value proposition. I don't know why you're doing this. Why would you explore for your own? This is why, we're seriously delivering for shareholders. I'll say just in terms of the financing, we also have about $4 or $5 million worth of warrants that are priced at about sort of around the 60-cent mark. So that money, assuming we're north of that 60-cent price this time next year, we'll have another 4.5 million coming into the coffers then. So, in essence, we're looking at us having about $20 million in the bank today. So we're very well funded for the next 18 months or so. Now I think I've forgotten the rest of the question, Matt.
Okay. I'm not surprised. I'm saying, how do you pace yourself? How do you pace this spend? You're well funded for the next 18 months. I get it. But you've also kind of got a duty to existing shareholders to show them where future growth comes from. Is it all from the drill bit? And I guess the other component is, how do you position yourself for the next cycle? Because you're not going to hit this one clearly, but how do you position yourself for the future?
Look, we'd like to think that we will hit this one.
How?
Well, firstly, you've got to think about how long this cycle might be, and of course, we don't see enough production coming on beyond 2026, 27. Of course, Cigar Lake will shut down at some point soon. McLean Lake Mill, which is fed by that, it's only 40 kilometres away from Hurricane and La Roque East. So we're probably uniquely positioned to provide product or ore to that mill and keep that mill going for Orano. So, there'll be a lot of parties that are motivated to see us develop our project very, very quickly. And I think really this cycle should be an extended one because of all of that production coming off and that supply gap beyond 2026. So that's what we want to target is being production around that time. So we're doing a few things. The next 12 to 18 months will primarily be resource drill out, more exploration work along that perspective. Now, proven, very prospective La Roque East conductive trend. So get out and explore that, build out the resource base. But we're taking a few modest steps at the moment, like that geotech drilling work that I mentioned there, metallurgical test work, such that when we're ready, when we've got a resource, we can advance. And we're doing all of this sort of all of the environmental baseline survey type work that we need to do as well, such that we're very quickly to roll into a PEA, feasibility study, should the project warrant it, which, at the moment we're very positive that it likely will.
So how does that map to what NexGen have done, if that's your model that you're engaging? 2026 production of that kind of scale, they're going to put 25 million in the market each year, apparently. So if you're talking about doing the same sorts of thing, you've got a lot of work to do in the next 5.5 years. How are you going to do it? How are you going to plan for that?
Yeah, certainly a lot of work, but that's our job. We've got a team that's doing that. You'll note that in our announcement of the commencement of drilling, we've appointed Peter Longo as our VP of Studies and Projects. Of course, Peter was the head of Projects and Studies for Denison and did all of that work to conceptualise and advance their ISR mining techniques. So we're building the team up slowly but surely. Pete's only part-time at the moment, but, all going well, we'll bring him on board full-time and just continue to expand the team. NexGen, Lee and the guys there were very fortunate that Cameco was starting to reduce their headcount and let a lot of good people go. We managed to snaffle a number of those guys. We're part of that broader NexGen group. So we've got access to a huge amount of talent and knowledge of uranium mining. We're very, very, very well positioned on that front. Before we started ISO, of course, I was the CEO of Tigers Realm Coal, and we built a coal mine out in far eastern Russia. So we know what it takes to build a project in a challenging location. The Athabasca is considerably more straightforward, particularly given we're out in the eastern side. We're close to that operating McLean Lake Mill. We're surrounded by all of that infrastructure. And of course, the Athabasca Basin, Saskatchewan's known for its mining people and technology. So we're in really good shape on that front.
You're in good shape with the right people who know what they're talking about. But expertise in ISR for Denison, who's not in production yet, isn't permitted yet. People you're dragging in from NexGen, which is not permitted and not in production yet. There's a long way to go, is what I'm saying. So that's why I'm not so challenging your desire or your work ethic around getting in production in 2026, but there's a lot of barriers out there. So what I'm trying to understand is, again, what am I buying into? Because as an investor, I've got choices out there, okay? I'm trying to say uranium, I like the macro for uranium. I've placed a few bets on uranium because of the macro situation. But there's also other choices out there which are going to give me more immediate type return. So if you can paint me a picture of where the growth continues to come from, I'm happy with that. But telling me that this is going to be in production in 5.5 years, I'm not sure I believe that.
That's that's fine. Watch what you can see what's happening with Arrow. Of course, Lee had the challenge there that Arrow, the more they drilled that deposit, the more it grew. It was a very long process to find the edge of the ore body and define what became, I think, the greatest uranium deposit ever discovered. It's certainly going to be the biggest uranium mine ever built. And look how fast he's advanced that project towards development. So we simply want to follow the same path there. Notwithstanding the fact that, of course, we'll we'll be exploring along that conductive trend and drilling out the ore body as we go here. So there's a huge amount of positive news to come out of the company over the next couple of years as we do that. And then we move into PEA, and I think, that'll be very positive news for the market as well. So it keeps coming. It's, we've got no shortage of great news flow as we move the project forward. And, very, very excited to get out and test some of those other targets we've got as well. The chances of discovery are very, very high now that we've proven up, particularly that Laroque East trend is highly prospective.
Well, that's what I'm kind of getting. I have no problem believing that there's going to be lots of good drill results and lots of good stories. I'm just trying to understand the path forward. You talked about, it's always like pushing the boundaries of the size of the ore resource. Okay, lovely. Maybe putting out a maiden resource at some time, but I'm intrigued. Like, what's the timing? Why then? Why not just keep drilling for a bit? There's under no pressure. If you don't have to hit the cycle, you're under no pressure to deliver a maiden resource. Just keep delivering big results. I'm thinking in the gold space of people like Craig Parry, who employ that strategy, and it's a brilliant strategy, works fantastically for them. And given you're kind of the equivalent, the grades are great, the grades are some of the best. It's how do management teams go about making a decision as to the right strategy for the time that they're in? I think possibly you've timed it better than NexGen in a way. One could argue that, okay, in terms of where the market is, right? So I'm excited about all of those things, but I'm just wanting a realistic evaluation, or at least to understand the different things that you as a management team, you as the CEO are playing with in terms of understanding what you deliver to the market in terms of those messages, whether it be maiden resource, PEA, or feasibility, etc., because you know where you fit. And that's what I'm not hearing.
Yeah, no, so look, of course, I think sort of to make it very clear, certainly the next 18 months are all about resource drill out, resource delineation, ore body knowledge type work, to understand what we've got there. Now, if Hurricane keeps expanding out to the east, and we haven't defined the limits of the deposit, it's very hard to do a PEA on something that you don't understand fully. So we'll let the ore body, the deposit, inform us as to how to advance the project. If it does keep growing, then we'll probably be drilling there for at least another couple of years. Certainly what we do know is that we've got probably another 2 serious and expanded drill campaigns to delineate the resource and understand the deposit better. And then we make some decisions around how quickly we advance the project. But I guess, 26, 27, we've still got sort of, I suppose, 6 or 7 years. So there's a lot of time in there to advance the project materially through studies as well. So, but that's for later next year. That's that we look seriously at that.
Great. Okay, Craig, keep the good work up. I hope those drill results are exceptional. As you kind of refine the plan going forward, pick up the phone, let us know what's going on. Results, and I know you're starting your summer drill program now, so let us know some of those results as they come in, please.
Sure, Matt. Thanks. Always a pleasure.